This entry model is the absolute best way to capture a daily PO3. So let's get right into it. The first thing that you need to do is you need to go on the daily chart and you need to wait for the Monday candle to close. With this model, you skip Mondays. Once it closes, you draw out the high, you draw out the low, and then you also mark the 50% of Monday's range. Now you can drop down to the 15-minute time frame, and over here, you're going to be looking for a purge of either the low or the high, and then you're going to take an entry model there. So if it purges the low, you take longs. If it purges the high, you take short. Right here, you get a purge of Monday low on Tuesday. So now we can start looking for an entry model. What I look for is a change in state of delivery or an inversion fair value gap. We have both of those right here. This is the fair value gap that would potentially get inverse, and then you have a change in state of delivery once we close above here. So this candle right here inverses the fair value gap. We actually also create a bullish one down here. This candle pulls into the inversion. I would take my entry here. Stop loss would go right there below this fair value gap, and we would target this first 50% level. At the 50% level, you're going to move your stop loss to break even and take some partials. Right there, we have the 50% level. We can now take some partials, move this stop loss all the way to break even, and then target the high of the range now. And before you know it, we get a news move up higher to the draw liquidity, and we complete this daily PO3.